Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. What a move in Disney yesterday. Holy cow. We'll talk about that. Not quite the biggest move of the year, though. You'd have to go back to, I believe, April 12th was the date of the biggest move of this year, but still a huge move nonetheless in Disney. So we'll talk about that. We'll talk about earnings as well. We have Canopy Growth, Walmart, Cisco, NetApp, Weibo. So some news on the earnings front as well. Carl Icahn stepping into this HPQ Xerox merger discussion. So talk through Carl Icahn's moves, some ratings as well, some notable ratings this morning. And our guest today, Marc Chaikin, he will join us at 8:15. He's the founder of Chaiken Analytics. Joel, what is the word here overnight?
We have a crisis here in the markets. We are red for 2 days in a row coming in for the S&P futures during the show. This time we're down 4 3/4 handles at 30, 90, 75. Building a little wall here at 3,100. A couple highs in the upper 30, 90 handle. The overnight high 99.75. The all-time high 02. So there's our area. There's our bogey for another leg higher. Close over 3,100. Crude back in the 57 handle, up 47 cents at 57.59. Gold trying to get back to 1,500, up 520 at 1468.50. Silver up 7.2 cents at 16.98, trying to get back into the $17 handle. Bitcoin drifting lower, down $165 at 8,620. Let's bring in Triple D. Triple D, I wanted to do the Mickey Mouse song, MICKEYMOUSE.
That'd be good.
No, Spencer wouldn't let me do it.
You want to do the Mickey Mouse song? I'll do it. MICKEYMOUSE. I don't know. Is there royalties we have to pay on that, though, that I just said?
Well, that's what I was afraid of.
There's probably royalties. We're getting sued by Disney now.
Yeah, we already gotten enough
trouble
this week. So
getting sued by Disney.
No. Wow, Dennis.
What a move. What a move. It's funny, though. Look where it stops, Joel.
150. I went out on a limb, and you can check the timestamp. When it was at like 447.5, I said this thing's going to 150. And
it's not a coincidence that it stops right there. I tweeted out last night. If you look at my Twitter, you can show the open book, what is sitting there. I didn't open the book this morning, but there was 170,000 shares at 150. So if you do the quick air math on that, that means it takes $25 million worth of buying pressure to push it through 150. It had a lot of buying pressure coming up to it, but it needs it at that instance, and it didn't get it. So that's why it stalled back off. These levels are huge. That's the level. That's the line in the sand. Last night it went over 150 again, quickly came back down. So it gave you a shot up there again. But that's the level, 150, because there's some size there in the book, and it's psychological too. Can it take it out today? Maybe. I mean, I've never seen a move in Disney intraday like that. I mean, we saw it when it did, obviously, when they announced it.
That was April 12th.
But that was overnight, and then it gapped up, and then it had a run after that. This was all intraday. So give us the news, just in case somebody was on Desert Island there last night and they didn't hear what it was the news there, Spencer. Give us the headline here that made Disney take off like that.
Yeah, I'm skeptical of this one. So the headline is that Disney said more than 10 million people have signed up on the first day of Disney Plus.
I'm skeptical too. Why are you skeptical?
Because you don't.
I tweeted it out last night, so maybe you read my tweet, or you were skeptical.
No, I didn't. Maybe you were skeptical for the same reason, but you don't know how many people signed up as part of like another package, like they got it through Verizon, or they got it with like Hulu, or they got it through something else. You don't know if it's like if they just signed up for Disney Plus, or if they're getting it like for free or what. Like you don't know. That's why I'm skeptical.
Or the free trial. There's a 7-day free trial. Do those guys count? Do those girls count? the 7-day free trial people, they just signed up. This was just signups, right? So there could be a lot of people that try it out for the first 7 days and say, no, thank you. I mean, I'm still positive overall. I'm not saying go in here and sell Disney because these are great numbers. I mean, the numbers blew it away. But, you know, there's definitely some inflation happening from Verizon customers getting it for free. So why not sign up for it?
Right.
And then secondly, it's 7 days for free for everyone. So why not try it out? So, you know, and obviously, I guess, you know, we should have realized the tea leaves were there when the servers all went down. They couldn't handle the volume. So you knew the numbers were going to be big. So if you were thinking that yesterday or 2 days ago and you bought the stock on it, congratulations, because this is a huge windfall for anybody who owned the stock the night before. I still own Disney in the long-term account. I'm sticking with it just because I'm a believer in the whole story. I think the valuation is an extreme, and I think this is going to be a huge product for them. I just don't know, like everybody's so excited, oh my goodness, 10 million the first day, or they're going to blow all these numbers away, because the long-term projections were where? I mean, they were saying by 2024, what, 60 to 90 million? Or wasn't it something like that?
Yeah, it was something like that.
Yeah, so you had 10 million the first day. So people are like, wow, these projections are way out. Well, we know the first day is going to be the best day. The projections are probably still light, in my opinion. So I think some of this rally is warranted. It's just got a little bit ridiculous, but maybe it continues. I mean, the story is hot now, and we know a story matters more than anything. And if the story remains hot, this could continue to run out. 150 is going to be the line in the sand for me, though. So yesterday's high, 149.92. What does it do that? Does it try it again? Does it fail there again? Puts a double top in there? Then I'd be concerned if I had it on for a trade. So let's see what it does at 150. It's a critical level.
Yeah, we did sneak over 150 in the after hours trading.
I traded it around that too, and I just butchered it all up. You can't even, I butchered it.
What did you do?
Well, I shorted around 150 because I was like, it's not going to go through. And then it blew through it at 150 and a half. And it's so much volume going on. I was like, I don't know. So then it came back in, and I was like, okay. And you know what? It's come back in pretty quickly. I actually took a small loss on it. Shorting it up at 150, I took a small loss on it, and then I watched the thing just collapse $2. And I was like, man, I got totally shaken out on that. So even me, 20 years experience, there's still instances where you can get shaken out of trades. It was scary at the time, though, Joel. It was just ripping through that 150. I probably should have waited until it came back down through it, not trying to be a hero and short up into it, because I was trying to short it as it was going up. That's what I did wrong. I should have waited until it started to, show like it was starting to leak, and then get short. So I was too early on the trade last night.
Yeah, it's hard too, because the offer would get lifted, but
the volume was insane.
I know.
I mean, okay, we talk about 170,000 shares. So it's already done 222,000 this morning. It's going to trade 1 million, so it can chew through that. It's not like it didn't do enough volume to be able to chew through that. In a lot of instances, you see the after hours volumes, 10,000 shares, 170,000 perched. Well, there's no way it's going through it. But there was so much volume happening last night. It was almost like I've never seen this much on no news, because there was no news last night. The news happened during the day, but on no breaking headline, I've never seen a stock that active after hours. It was trading like it was intraday, like it was open. It was so active. And this is, 5 or 6 or 7 hours after the release of those numbers. Like at 6 o'clock last night, it was still trading like every second. It was crazy active for, non-breaking headline. Obviously on the headline, it broke intraday, but I'm talking about like 6 o'clock last night. There was no new breaking headlines. It was still trading that active. Incredible action.
Yeah, and so we got that during the regular session. I mean, we don't really need to talk about the technicals anymore in this. I'll just tell you, since the low, since making that high after hours, 147.60 is it's minor support. That's what I'll call here. Someone, anyone that caught it over 150, they're just looking for a scalp here. So 147.60 on the downside, 150 on the upside. How long will it take them to move into one of the top 10 components in the S&P, Dennis, with this kind of move?
Where is the market cap now?
How
far are we from
I have
that?
the market cap on me, but I have my list of my top ones, and going before yesterday, I haven't checked it yet today, it was about 15th or 16th. Now with that move yesterday,
helps.
Yeah, I'll have to recheck.
I mean, there's a good story going here now, and the valuation is not ridiculous. So, like somebody, and it was Grasso, I believe, given the argument on CNBC Fast Money, and Grasso is a good argument, and I've given that same argument, comparing it to Netflix, and I've given this argument for Disney for a while. If they give, even half the multiple on the Disney Plus part that they give to Netflix, the stock could run. The stock could run because
What about-
you're trading 25 times, on earnings, that we know are stable. Like you've got obviously a lot of, a lot of coming from the parks, from the movies, from everything. Now you get this whole new income stream coming in. If they decide, well, that's the growth part, and we're going to give that part of the earnings a higher multiple, not saying the whole company gets a higher multiple, but that part gets a higher multiple, then it's got some room to run.
If they're adding how much is it a month? $7? There's a $7 and a $12 package, right?
Yeah, I think probably most people are on the 7 though.
Yeah.
Okay, so if they're adding 70 million theoretically here, they're adding $70 million a month. I don't know what their expenses are.
That's on the first day though, Joel.
And so just imagine what Netflix.
200.
So Netflix.
$199.99. Get your order out there.
$200. Joel's bullish.
I'm for 200.
I'm still long in the long-term portfolio.
Dennis, I want to.
150 is big.
All steak dinners, all lunches.
I called 200 on this show about 6 months ago.
My old car.
Do you remember me saying that on the show?
Me too.
I said this could eventually be a $200 stock. It was when I did that whole valuation with Netflix. It was 3 or 4 months ago. Stock was trading around 135. It was after the Disney Plus announcement. It was 135, and I said I bought it in the long-term portfolio because I think this could eventually be a $200 stock. That was when I put it in the long-term portfolio, which I was somewhat early. I bought it at 139. I was somewhat early because it went back down to 129.
Right there with you. I'm right there with you.
Yeah, we were both kind of early on it, but I was buying it because I think eventually the story could propel us. Well, the story started yesterday. Now, the question is, was it too much too fast yesterday? Maybe, but I'd be scared to be short.
And I mean, you think about that, the eventual numbers. What about all the analysts? 160? No, I'm going to 175. You're going to have all these upgrades coming.
Could.
Yeah, price target raises.
But none came overnight, which is interesting. I would have thought we'd get one, little straggler here coming with an upgrade. I didn't see any upgrades overnight, which is interesting.
Yep.
So Disney's gain is Netflix's loss, apparently. Netflix got hit yesterday on this. No real analyst commentary again, but Netflix lost almost $10 on this.
Yeah.
I'm still saying I think the competition is not just going to be from Disney. It's going to be from Apple. It's going to be from potentially Comcast. Streaming competition is coming all over the place for Netflix. Nosebleed valuation still. I do not like it. I've talked bad about the stock since 3:30. I'm going to continue to say I think the stock is a sell.
Yeah, it's tough. I mean, I am looking forward to The Irishman coming out, but that's like that's one here. It's one thing, one show. I mean,
it's a movie.
It's a movie. Yeah, it's a movie. So they got a lot of cost in their content. Dennis, I don't know if it's appropriate time to ask this question, but Mr. Stark in the YouTube chat, what kind of limit orders do you use after hours? Or are you just hitting bids and lifting off?
No, it depends. Sometimes you'll sit out there. If it's got the momentum going, I'm not afraid to get out on the offer. If you can see the thing's lifting, I'm no need to hit a bid. If I'm like really wanting to be short something, I hit a bid. Like if something's breaking news, they don't hit, like you say, when stocks are going down, they're not lifting offers. So on a breaking news, like something's bad, I'm hitting the bid. There's a bid out there, I'm hitting it. Like for example, when I traded the IAC versus the match, and match turned and started going red, and IAC was sitting there bid flat, I hit the bid, and I immediately made 5 points in 5 seconds on that. Obviously I covered soon because match kept going down after that, but it's just ARB. That's just pure ARB between the two stocks, which stuff I'm going to talk about out in New York on Tuesday as well. Throw in the IAC owns a huge chunk of match, so there's a relationship there, and all I'm doing is exploiting that relationship. But it depends. So sometimes if the momentum, you're trading momentum and you're going against a contrarian thing, you throw your offer out there. Maybe you're long, and maybe you're going with it and you just want to get out and you can see they're just lifting offers. We'll throw your offer. No sense hitting a bid if they're lifting offers. So you got to just judge the momentum. So that's a.
And then if you're exiting, let's say you have a nice short on something, you pick the level, you might throw just a bid. I mean, if you want, out, you'll throw your bid.
I don't like to have my bid sitting there though, because I believe there's so much like if they throw a bid out there in the high frequency, we got a bid, and then they start buying it on you. I like to use discretion. So what I have is a tool. It's called the discretionary order, where if I want to buy the stock at 22. I'll throw it out at 21.50 with 50 cents of discretion. And then if it comes down to 22, it'll lift the offer. So a lot of times, that's how I play it, is with discretion. Sometimes I'll put a bid out there, but I don't like my bid. Like if the stock's coming down, I don't want my bid to push the price higher on myself. So, you've got to sometimes, I like to stay outside the market, not influence the market at all. So that's why I like using the discretionary market, because they will push the price away from you, especially if something hasn't traded, like just on earnings, it's looking for some, something, what's happening here.
Direction.
100 shares moves the price. Like, 100 share offer, and then the hype goes, oh, there's sellers, sell, Mortimer. I mean, that's how the algos work. So, you're
Dennis,
pushing the price away from yourself.
Do you do play-by-play when you're doing the after-hours trading?
To myself?
Yeah.
No.
Since you only talk to us an hour a day.
I just talk to myself the whole time. I'm banging my head on the Disney. Why did I short it already? It's a 150.50. Why did I short it at 150?
Spice, want to address Spice's question here? How long will it be before they start make money streaming?
I mean, I don't know if it matters really.
Yeah,
and I also don't know how many new shows they have. I know they have some.
What is that, Mandalorian though? The Star Wars?
Yeah, Spencer.
Right.
Brent wants you to sign up and watch that.
I want to watch that too.
All right,
I got invited to a Mandalorian party for Friday night.
Really?
I'm not joking.
Are you going to dress up like Darth Vader?
Yeah, we've done that before. Did I tell you about that? Did I tell you about my buddy's 40th birthday? He's a huge Star Wars fan.
Wait, no. Tell us after we bring on.
Oh yeah, Mark. Okay, we'll save the story.
Okay, thank you.
Mark might want to hear the story.
Well, maybe he does, but he's here.
No, go. It's Mark's time. Let's bring on.
He's here with us now. Marc Chaikin from Chaiken Analytics. Mark, good morning.
Good morning. I keep trying to turn on my video, but it won't turn on. I don't know why.
All right. Well, we'll settle for the dulcet tones.
You know what I do, Mark?
There we
actually,
go.
There we go.
It turns out it was on your end.
Okay.
That's Spencer, yeah, for you. Actually, it's usually Joel. Go ahead. Mark, how are you?
I'm good. Looking forward to seeing you guys in New York next week.
Excellent. We're going to have Marc Chaikin there. It's going to be a really fun time, obviously, out there in New York. So if you can, please join us. But Mark, I mean, these markets are crazy. I mean, we've been climbing higher. But what about the move? First, I got to talk with you about Disney. What about that move? What are you thinking on Disney now after an extreme move after those Disney Plus numbers?
Oh, I wouldn't chase the stock up here. I think you guys nailed the dynamics of what happened, but which didn't zero in on was the debt that they both have, Netflix and Disney, huge debt that they took on to buy 20th Century, and also the cost of creating this content is going way up for both those companies. I think this is sort of a cannibalization situation, and I'd be avoiding both stocks. Netflix we haven't liked for a while, as with you. I thought that rally up to 298 or so was a great opportunity to get out and short the stock. Disney is, as you point out, it's a company with a lot of assets. I don't think streaming is going to make that big a difference in Disney. Yep, the 70 million in revenue, very nice to have, but a lot of debt there. They've got to do something to cut that debt down.
All right, silly me. I thought we would be done talking about Disney by yesterday. Clearly, we're not. But let's move on nonetheless.
Spencer's been trying that.
I've been trying to move on from Disney for a week or two. Walmart here. Walmart had earnings this morning. The EPS beat. The sales missed. They raised their full year adjusted EPS guidance.
Well, I think Walmart is a canary in the coal mine for the stock market that's going to continue to move higher. We've reached the bottom end of our range. 3,100, 3,200. And we now have a real coda to earnings season. With earnings season typically ends with the Walmart report. And I think it's a good one because it reflects better activity at the retail level.
How much of a signal does Walmart provide to you for the overall economy, Mark? Is that like a thing that you watch?
It's a nice backdrop indicator of the strength of middle America, basically. I mean, the one percenters aren't shopping at Walmart, and it's healthy. This is a healthy earnings report, especially the guidance. I think the guidance is critical here.
All right, Mark, what else is on your radar as far as stocks you like, stocks you don't like heading into the end of the week here?
Healthcare really stood out during earnings season, and we had two recommendations during earnings season, first Bristol Myers and then CVS. So I think healthcare had all the negative news baked into it. And when you look at the reaction to healthcare earnings, companies that surpassed Wall Street estimates really did very well, like CVS. Companies that failed to meet estimates, there was really no selling pressure. So that tells me that the bad news in healthcare is baked in, and they're not focusing on the presidential impact on healthcare down the road. This is a real growth sector. Healthcare has segued from defensive to both defensive and growth. So when the market was looking like it was the fear trade, never going to end, utilities, consumer staples, healthcare, they were participating. Now we're in a more cyclical phase, and healthcare is still participating. I like it.
So how do you know which industries within healthcare are growth and which are value?
Well, we look at Chaikin Analytics. So you've got 4 different ETFs, Select Spider, healthcare related. You've got the big one, which I don't think is a good guide. You've really zeroed in on one of the problems with healthcare. You got to know which stocks to own and where to go. So I think it's very selective. A lot of the pharmaceutical stocks are clearly, if not crapshoots, fluctuate day to day, week to week. But within healthcare, when I look at the large cap sector, I'm going to look at the Select Spider Sector ETF and see, what's working. But right now, our 2 favorites are Bristol and CVS. I think the synergies between the CVS Aetna combination have been underappreciated in the market. And I really believe that that's a part of what's driving the stock. This has become a monolith. It's really become a major player. And you've got across the board, biotech strong. Amgen and Biogen have very bullish ratings in our work. The story with Bristol to me is the Celgene acquisition. Celgene is really doing the premier work in stem cell research, and it's going to now be a bolt-on to Bristol's pipeline. So there's a lot of names in this space that are doing well.
What does a Chaikin Analytics say about Walgreens? You've got JP Morgan saying it could be worth $75 a share at a buyout, but what do your metrics say about Walgreens?
Well, Walgreens.
Mark,
The dogs
what
are
are we
barking on
buying?
Walgreens.
Alcoa, US Steel? What are we buying? The dogs are barking, Mark.
The dogs are barking. Yeah, I hear that. Maybe that means we ought to do the dogs of the Dow. Well, Walgreens had a bullish rating before the merger or going private turned up in September and October. It's now neutral. I like, the pattern in the stock, but this is a play. They're going to get, a go private bid from Kohlberg or someone like that. And this could be big.
All right, what don't you like here? So you gave us 2 names in healthcare. What names don't you like?
Well, in healthcare
or anywhere.
I think the fear trade is over. I do not like the electric utilities. They turned them into growth momentum stocks with a PE higher than tech. That's insane.
Yeah.
For an industry that was growing at 6 to 8% a year, if that. I don't like consumer staples here. I really believe the whole idea of value is coming back. I don't think that's easily quantified or monetized, but I do think cyclicals are coming back. So you've got to look at the aerospace stocks that got beaten down pretty badly in the industrial sector. Again, healthcare, tech is great. Look at Qorvo's report. Qorvo's report, I think, is the most significant earnings report of the whole 6-week earnings season.
I mean, a lot of these tech stocks aren't expensive, and I can't understand it either why some people want to pay 24, 25 times earnings for a Procter & Gamble, and then you've got some tech stocks that are trading with PEs of 10 that are actually growing. It's, like exactly what you said. It was like this fear trade that everybody's just piling in on the defensive stuff. Oh, we need dividends because we're going into a recession, the yield curve inverted. And that's kind of off the table here now. So, some of these stocks have actually held up, like the PG is not that far off the highs, but I think I'd be a seller rallies in a stock like that for the same reasons you just cited.
Oh yeah, that just went off the charts on a valuation basis. One really good market analyst does a ratio between XLK and XLP. It's my old friend Martin Pring. And you've had a big breakout of XLK versus XLP. That's how he measures the fear. The value cyclical trade. And as of last week, you had a big breakout there. But why don't you go to Corvo? I mean, Corvo tells you a lot about where tech is going. This is a 5G play.
Yep.
And clearly 5G is, we're behind. No doubt we're behind China in 5G.
I mean, you look at Qualcomm as well, same type of thing. You've got obviously, 5G play with Qualcomm as well, and the stock's been taken off. The 5G stocks have showed a lot of life.
Well, Corvo has had a bullish rating in Chaiken Analytics since February, and people who followed that and stayed with it have finally gotten the payoff. But I don't think you run out of Corvo here. We had a call on our user forum Monday night. Well, how do I protect my profit? Do I use a trailing stop? And my response was put up an 8-period exponential average on your online brokerage chart or your Chaiken chart. And if it breaks that, then you've broken the short-term momentum. But if it stays above that, ride it for all it's worth. These stocks are in new all-time high territory. You know what I call that, blue sky territory. There are no clouds. There's nobody with a loss in the stock.
There's no overhead supply because this hasn't been there.
Tell me about New York, guys. What are we looking forward to?
Spencer, this would be on you.
This is on me. Okay. We got a full day of fintech programming with a little bit of pre-market prep on the side, right? So Joel and Dennis are going to be in one room doing some trading education, and across the hall we're going to have panels on payments and APIs and a lot of the nitty-gritty and the underlying tech of our industry. Joel, you were trying to get a word in though. So
well, no. It's we're going to do the show in the morning. We're going to have a special guest with us there during the show, and then I think around 11 we're going to go into our first educational session, 11 to 11:30, and then during the breaks at 2:15 we're going to do another 20 to 30 minute presentation. And then at 4 o'clock, I think we're just going to kind of open it up to like a Q&A and just, for everyone that just maybe didn't catch the other two sessions to come in there and just kind of pick our brains, see what we do to put together the show and everything. So that's the lineup. Are you're going to be there the whole day?
I will be there mostly in the morning through about 2 o'clock.
Okay.
Coming in the night before.
Spice just wanted to say, or just reiterate why you don't like the REITs utilities here at this point.
I think that they got too much play on the defensive fear trade, and with Treasury bonds moving back up, they're less compelling on a where do you put your money to earn interest, but. These rhythmic cycles come and go, and I think it's gone for the whole defensive interest rate sensitive sector.
All right, Marc Chaikin is the founder of Chaiken Analytics. I seriously can't recommend his site enough. If you want a really high-level overview of how all the fundamental and technical factors you want them all summarized into one number or one rating, that's what his service provides. So great service for stocks and ETFs. Marc Chaikin, thank you so much, and we will see you on Tuesday.
See you on Tuesday. It's going to be good weather in New York.
Oh God, I hope so.
Excellent. We've got a foot of snow here in Detroit, so we need to get away from this snow.
Ooh, okay. Have a great weekend,
winter
guys.
came 2 months early here in Detroit.
Well,
yep. All right. See you.
Enjoy.
See you, Marc.
Thanks, Marc.
All right, Dennis. Now you can tell us your story about the Star Wars thing.
Okay, so going back, we keep coming back to Disney.
Well,
so Disney's just taken over the airtime everywhere.
Tell the story. So
I don't even remember where it came from,
okay,
what we were talking about before, so we kind of missed it now.
All right, okay, it's over.
Dennis,
all right.
come on.
All right, I was talking. Okay, so I was just saying, you were saying, are you going to get all dressed up for Disney Plus or something? Julie asked me, and I was like, actually, back on my buddy Phil, his 40th birthday, he's a huge Star Wars fan, so we surprised him. And we all bought costumes, and we showed up at his house. I showed up with a Jedi costume. Another buddy was in a Jedi costume. We got him a Darth Vader costume because he was kind of our leader. The other couple people were with stormtroopers. So we all went basically as Star Wars characters. This was in the middle of like August, and then we picked them up and we went to the bar. We did bar hopping in Star Wars gear. So it's kind of interesting in the middle of the summertime, and a little bit hot, obviously, when you got a full gear on, but. We got a lot of looks. A lot of people were wondering what is going on. So anyways, it was a really fun night. So I'm not scared to get dressed up, is what I'm saying, even if it's not Halloween.
All right, great stuff. Let's move.
We're moving on from this.
Let's move on to this. The other non-earnings headline this morning. Carl Icahn here is getting into the Xerox HPQ story. He has a he already has a 10.6% stake in Xerox. Now he has a 4% stake in HP, and he's pushing for a merger here.
It's interesting because I would have thought originally he would be one to oppose it because he was in Xerox, and obviously if Xerox buys HPQ, Xerox is probably going to go down on that. There is some synergies there. So now he owns both. So now he's just hoping the synergies are going to bring out both position, like a riding tide lifts both ships, I guess, here. I'm still torn here on the HPQ because I don't think HPQ wants to get bought. It was kind of in the tea leaves, and we obviously had Gasparino reporting that this took HPQ very much by surprise because originally HPQ was looking at acquiring Xerox. So I think they're somewhat offended that a smaller Xerox is going to make a bid for us. That's why I sold my HPQ into the pop on the second day, because I was nervous that this could turn the other way. And if HPQ is the one that buys Xerox, HPQ is going to be down at $17. So if it's Xerox still buying HPQ, well, there's a $22 offer floating out there. There's more upside here. But I think this saga still has a long ways to play out. Icahn going to push for it. It helps. That's why HPQ is trading up here this morning. They also on the side raised the dividend last night. But I don't think they want to get acquired, and that's why I'm not buying HPQ, and that's why I sold my HPQ. Next.
How about
Joel has no comments on it. Next.
No, I mean, it had that pop that day. The pop was sold, so
it was sold hard for a reason.
Yeah.
They came out, basically said they were shocked. Gasparino reported, and then there was rumors that they could go the other way. Yeah. I'm like, that's good enough for me to sell too. I'm nervous on that headline too, because if things up at 21, I'm getting, you're getting a huge windfall on the potential. This is a deal that's going to happen. And then there's rumors the deal could go the other way. Well, that'd be right back down at 17. I don't want to see those gains go away.
Hey, Dennis, did you see this insider buy in Dropbox yesterday?
No, it was a big one.
On the tape, 500,000 shares.
When? Is this why it took off?
Dropbox 147 is reported here on Benzinga Pro.
So this was intraday.
Yeah.
Yeah. I'm typically not trading at 147 in the afternoon. People, don't understand that, but I'll tell you the reason. I've always called 11 to 2 toxic hour, where it's a lot of chop and not a lot of. It's why my hours are extended. I trade very early in the morning. I trade very late at night. Middle of the day, I find it very hard to make money. One, there's not a lot of breaking headlines, although that one would have been tradable. Two is, and you know how I like trading headlines. And then two is there's so much chop in those hours. So I've always said from 11 to 2, I've said this on the show a lot of times, I typically take those hours off.
That's a big
I wasn't on my desk.
500,000 shares. I mean, that's, it's not
a good buy.
Yeah.
Yeah. It's a vote of confidence. The stock needed that. And I'm not surprised to trade up on that. I wish that headline would have broke at night and I would have been buying Dropbox on it. I wish I would have been at my desk when that headline broke. We'll say that.
Okay. All right. S&P's just hanging out at 30.90, down 5 handles. No big deal here. We dropped on the headline yesterday that things, Dow Jones reporting things weren't going well with China according to farm purchases. But how many times have you seen that scenario where, you have a 10, 12 point sell off and then it stalls and then they buy it right back up. So you did get an intraday headline in that. So just for anybody looking for the reason for that drop yesterday. All right.
What about the pot stocks?
I knew he wanted to go to Canopy Growth. All right.
We keep getting this one right.
Let's do it. Canopy Growth earnings this morning. Q2 EPS, they lost $1.08 Canadian dollars per share last night. That is up on a year-over-year basis. You would expect that, of course. Sales also up on a year-over-year basis, 76 million versus 23 million in the same quarter last year. Let me see here. Q2, they sold 10,900 kilograms, up 3% sequentially from last quarter. And I don't know if there were estimates, but you don't need me to tell you that.
Yeah. Boom.
NBEV also reported. Let's do NBEV with it.
Oh boy. Oh, InBev. I kind of forget. This one kind of fell off my radar.
I did trade that one. That's one of the pot stocks.
This one fell off my radar here. So InBev also
fell off everyone's radar.
Q3 EPS An InBev 14-cent loss versus a 4-cent loss estimate. So they missed that number. Sales 69.8 versus 69.95 million. So light on sales as well.
All right, both these stocks. Party is officially over for NBev. It was officially over a long time ago. I know when the stock was $9, I said on the show, eventually it's going to be back under $2. We still haven't got there. It's been a long time. It's been a year since I made that call. It's almost there. So it took almost a year. It's $2.26. Yep. I still say it's going to be under $2. I only have 26 cents to go. You can go rewind the tape back to September of 2018 when I said that, and it upset a few people, but that was a storied stock. The story is over. CGC, these are real companies. They don't make money though. And the competition, I mean, I give this argument every single day. If you've been listening to the show anytime in the last 6 months, even going back further than that, we begin the same argument. Competition is coming and most of them aren't making money. So that's why these stocks are still sells. It's down 8% here. Again, they've been hit so hard here. Is there a potential for a little short squeeze here or there? Yeah, we saw that 4 days ago and immediately got sold again. But I think longer term, I think you look at these things and people say longer term, it's going to be okay. I think longer term, it's not going to be okay. I think longer term, all these things go lower. Short term, they could get squeezed. Long term, they still don't make money. Competition coming. Story is over.
I hear coming December 1st, you're going to be able to buy marijuana legally here in Michigan. Did you hear that, Spencer? December 1st?
Well, it's been illegal, but you haven't been able to buy it.
Yeah, stores.
Right. Nothing's been opened. I don't know. I didn't hear that. No.
I heard that. I heard that on the way in here.
All right.
I don't know what to say here about Canopy Growth making a new all-time low here. We've talked about it. The former not all-time low of the move. Let's just call it that. The former low of the move was 1789. That's going to be resistance now. And on your monthlies, and this is just a monthly number, over the course of time may come into play. 1674 was your low in February of 2018. So if that was your target, you might get a shot at it today. 1674, just sitting here at the lows of the session, probably a better place to cover short than to start along. And NBev has been falling as well. Not much.
There's nothing to say about that.
Yeah, not much to say about NBev.
If you think it's going back to $10, I think you're very wrong. If you think it's going back to $5, I think you're very wrong. I think the story is completely over here.
Okay. All right.
Sorry. I disappoint a lot of people, when I talk, bearish, I get a lot of questions about the pot stocks, and a lot of people are really caught.
Where on like Twitter or just like
people, friends and stuff? Because I'm from Leamington. They get 4 pot plant, or that's where Afri is based. So I have a number of buddies. What do you think of the pot stocks? I'm in them. What do you think? I get this all the time. I get this once a week. And you know why they're asking me? It's because they're all stuck long. So what's that tell you when you have so many people like they're nervous and they want to get their money back? They're probably not getting their money back. That's, sorry. It's just the way it is. The story, the valuation never made any sense. That's why I never, I had these things, as a trade on for a while, a few times. I've always said, don't stick these in your long-term portfolios because eventually, valuation is going to matter here. And it does now. And the valuations are all still nosebleed.
That's a nice positive way.
I've been saying that for a long time. So I'm just a repeat. I'm basically on repeat here.
I know. Okay.
I just want to keep reiterating it because I keep getting these questions. It's not getting better. I don't think it's getting better.
All right. Cisco here yesterday after the close, EPS beat for them and the sales beat. They gave some guidance as well. That was a smidge light, their EPS guidance. Light by so 75 to 77 cents is the range that they gave. 79 cents per share was the estimate for the Q2 EPS guidance. Sales for the guided down 3 to 5% or on a year-over-year basis.
Terrible.
And
I bought this thing in the long-term portfolio at 51. Big mistake. It came back a little bit a couple times. Tried to give my money back if I wanted. I said, I'm sticking with it. It's a long-term portfolio. Now it's back down here again. It's been terrible for me so far as an investment here. As much as I've got the pot stocks right, I've got some stuff wrong sometimes too. And Cisco's one I've had wrong. Still sticking with it in a long-term portfolio. I believe valuation still makes sense here long-term. Short-term, it's been horrible investment.
Got one level only. Let's see if it was exact 40. Is this below the low of the move? Oh, it is 46.46. 46 even was your low of the move. You're trading below that. You spiked down to 45. Wow, it got in a lower 45 handle, 45.12. So there you go. There's a target if you're looking on the downside. Looks like someone has a bid, though, at the 45.60 area. So big, thick stock. I don't know, 45.12. I don't know. It's going to take a lot to get it through there, but kind of quiet price discovery. Bids and offers right here has actually been pretty tight over like the last 2 or 3 hours, 45.5 to 45.90.
All right, I'm going to say something right now on Cisco, and you guys can tell me if I'm off base here.
Sure.
But the analyst the morning after can tell you how bad the sentiment is. So this morning, no one is downgrading the stock. They're all lowering their price targets, but they're maintaining their neutrals and their buys. If the analysts were to come out this morning and downgrade sell, neutral, sell, neutral, that would be a bigger red flag than this morning when they're not doing that. They're still bullish. Doesn't mean they're right, but they're still bullish, and they're just lowering their price targets to play catch up. So
it's a good observation.
That would make me feel a little bit better if I was long, which I'm not.
I am long, and I don't feel good at all about it. I mean, the one thing I do say is it hasn't taken out the low of October, 45.55. That's a critical number for this stock to hold. One thing, though, is when you're buying value stocks is there is a floor at a certain point with dividends and stuff. It's not like, it's going to go down to $10 or $20. I mean, there is value here. What's the multiple on this thing? 12? What is it going forward? Even at the lower earnings projections.
Yeah, let's find it real fast in Pro.
It's low. But you know what? Low PE stocks have been out of favor. They came back into favor for a month or so, but
forward PE is 14.
Yeah, 14. I mean, it's not crazy expensive. I like buying stocks like this because I'm a value guy. Value has worked for me over the 20 years of my investing career, but I've had a lot of, periods, in the last couple of years is one of those periods, even the last 3 or 4 years, where my portfolio underperforms because it's not on all the crazy growth names that have been taken off. But you know what? They hold up a lot better during periods like 2008, during periods like 2000, when you're buying stocks when PEs of 90 back in the year 2000, you're in trouble. But you're buying PEs stocks with 10s, a lot of those held up. So, that's all depends on the market. When you're a raging bull market, which we really have been in the last 6 or 7 years, growth is going to outperform value all day long. I don't know how long that continues, though. Are we due for another bear market? Eventually, but I'm still sticking growth stocks. I bought some Workday, I've bought some Shopify. I bought some growth stocks on this pullback here because I don't think the bull run's done.
S&Ps are leaking here, Dennis. What are you seeing? You seeing some selling balances out there, or what?
No, down 4 points. No, I don't really see anything. I mean, there's still it's headline driven too. I mean, we had some numbers from Europe there this morning. There's lots of reasons you can talk about why maybe the S&Ps are down here, but I mean, we're down 4 points. We're really down nothing.
Right, and they just juiced the S&Ps a little bit here in that last 15 minutes, so that's why it's reflecting a 7.5 point loss.
There's nothing. I mean, let's put this in. We're literally 0.3% off the all-time high, 0.3%. So it's hard to just say, oh, that's the top. 310 was it. Let's get the hell out on SPY. I mean, this trend has been up for a long time.
Yep.
There's so many people still underinvested in this market. That's why every pullback gets bought. We saw it with Apple the other day. It's down $2. It gets bought. I mean, now you're seeing Apple this morning actually count a downgrade here today. We should talk about that. Maximum downgrading it to sell. That's interesting. Bold call.
You're reading my mind. I was going to go there next.
Yeah.
So we haven't seen a downgrade to Apple in 4 months. July 8th was the last time it was Rosenblatt. Downgrade Apple to sell. We're getting it this morning. Maxim downgrade Apple to sell, gave it a $190 price target.
It's a bold call. It's a stock that's been going straight up. Could it cool off on this a little bit? Maybe, but there's always those buy the dippers lurking below. I'll give Joel his thoughts.
Yeah, I'll just got to get on mute here. Haven't done that in a while. Trading at the lows of the pre-market session right now, right at 262.63. Let's go to the dailies. I'd have to hold out here. I easily see 261 today. That's only $2 away. There's your last 2 lows. So if you don't hold that bounce at 261, then we're looking at 258.28. So double bottom there, 261. That's what you got to hold. And now going back on the upside, you know, that all-time high from yesterday, that closing high does have some significance, 64.47. I kind of thought that someone was going to, I mean, not that I anticipated or played or anything, but I'm like, man, this has got a lot of upgrades. This thing has really had a bit. I wonder if someone's going to try and walk it down. So you see what happens today. See if someone else tries to, what do you call it? Jump on the bandwagon, and do it again
Like
tomorrow.
one analyst comes with downgrade, you think another one could follow suit here?
Yeah.
Somebody else thinking, I mean, it's run straight up. This analyst is making a bold call. So props to the analysts for having some guts. So many of the analysts we talk, it's like lemmings, the stock rallies up and they all upgrade it the next day. This is a completely contrarian call. Stock made a new all-time high yesterday and they came out with a downgrade. So very, very bold call. Still on the long-term portfolio. I'm sticking with it, but it's got me spooked a bit.
Do we have the history of this guy's calls in the stock? Is this like his first call ever? I mean, what was his rating?
Maxim somewhat followed.
Yeah.
It's more followed than Rosenblatt.
I mean, it's just like you wait.
Although I like Rosenblatt too.
I mean, like if I was at Wall Street Analyst and I wait, I mean, all this time and then, okay, yeah, now it's a sell. I mean, I don't know. I mean, it's kind of like throwing a
but isn't that the way you're supposed to do it? Buy low, sell high. I mean, this analyst reading the book. That's what stock's going straight up. Okay, it's went too far. Sell it.
Whose book?
I kind of respect that.
Whose book? He's reading your book?
I don't know. Like you think everybody, other analysts is upgrading AT&T at the all-time highs, and then they're downgrading at the all-time lows.
Exactly.
I mean, this one actually is trying to call a top. I mean, it's gutsy. I don't like calling. It's definitely not my book, Spencer, because I don't like calling tops on stocks. But I'm saying the textbooks, or when you look at the valuation stuff, stocks continue to run. Things up 40% this year. I mean, maybe it's time to book some profits.
That I would totally agree with, but I might have said booking profits at like 240 or 250. So, it's just trade it. I just like the 261 number. It sticks out to me. It's a double bottom from the last two sessions. Use that as support. If it breaks, then I'm looking for 258.28 on the upside. I don't think we're going to see 264. I don't think we're going to see that 264 handle. So I'd figure whatever the mid, whatever your pivot was from yesterday, if you're looking for a pop to sell it, I'd say the math on it, 5, 1, 6, 4, on the 6, I think you'll find sellers in the 262.5, 263 area if you're looking for, a fade of this and gets any kind of pop, but the market's weak too. But Dennis, I know there's an upgrade up there that you just have your finger on the button. Beyond Meat catches an upgrade.
No upgrade initiated. It wasn't an upgrade. It was initiated with coverage with a buy at Berenberg. They put $100 price target on it. I will say there's a lot of risk to try to pick up 20 points on this.
106.
106?
Yeah.
Okay. So, in any regard here, it says 100 in the pro. Maybe they should change that if it's 106. But BYND also had an insider buy last night too, which is the first insider buy that I've seen in a long time. But it was actually just exercise. I guess it wasn't an insider buy. They just exercised some options there that they had from $1.50. So probably did turn around and sell tomorrow. Yeah, it's the same stuff. I think Beyond Meat long term, you're in trouble. Short term, we could squeeze a bit. I mean, it's straight down from 150. Could have rallied to 90. Yeah, good. But I think the long-term path least resistance is still lower. I would be a seller of any significant rally. I think Beyond Meat, I said it could be under 60 by the end of the year. Well, it's looking kind of tight. I mean, it's going to need to get some momentum. I think this thing is going to be under $50 by the middle of next year, maybe under 40 even. So I am bearish Beyond Meat. I would sell any rally into this. Again, I'm not shorting the stock here because it's way oversold. Right. It could squeeze them a bit, but long term, I would not want this in my long-term portfolio, not with your money.
Let's see here on the dailies. What do you got on the dailies here? You are trading at 81. I see 81.19 high. You haven't even gotten through that yet. That's your 4-day high. So if it gets through 81.19, then you do have some air up to 83.51. But if you're going on this guy's call and you're saying, okay, I'm buying it at 81, I'm using a 13-point stop for a 26-point target, then but if you're trying to trade it off the hop, you're buying it off the hop, you want to see it, boom, open up, take out the pre-market high and just keep on going. But the next, if you can't get above 81.19, 83.51 was your high on the 6th. And I don't know. I just don't see it.
Good morning, Zingers. Today I wanted to come to you live. I want to let you know we're going to be doing live videos from time to time here at Benzinga. We're going to call it Benzinga TV, BZTV. That's right. We're going to come live to you every once in a while. So I want to let you know this is going to be coming down the pipe.
Today in it. But
Valuation still makes no sense. I don't know
yep,
what
this
they're
is a
looking at.
longer term play. The guy's making a longer term play.
Yeah, he thinks it makes sense. I don't.
Stop going down too, right? I
For
mean,
a day.
it's
For a day. Horrible story.
actually it's up 2 days in a row. It went from 70.
Okay, we'll give it to 2 days in a row. Went from 73 to 81. It stopped going down. This person was waiting for it. Gutsy call by that analyst. I think he's wrong.
There you go. Gutsy call. And
Gutsy call day. Good. The analyst. I respect the analyst for the call. I think he's wrong though.
okay. All right. What do we want to move on
I
to?
mean, yeah, it's hard to find a more contrarian call than sell Apple, but
Sell Apple. If you're selling Apple and buying beyond
Did
me,
we
you haven't not been listening to Benzinga's pre-market prep.
did we cover Walmart yet?
yes,
we did.
well, sort of.
It's leaking. It's leaking. That's just a big move.
Talk about the pre-market action here. It's a huge move for Walmart. Again, Walmart's loved right now. It's all-time high. It's hard to short stocks like that.
Right. You got up to 125.68, and that's you're $2 off that. So I really think it's going to be hard to get back to that area. Kind of reminds me a little bit. Who was it they shot up over your Disney scenario? I mean, longer, going forward, it was a bad call if you were selling that day, but it just kind of like got overdone in the pre-market. You're backing off. So I'd use, 124, 124 and a half, 125. I'm sure there's some big orders there. I don't know how high it can open. I think people are just gauging that some stock in the book will keep it down. Yesterday's close is 120.98. So there's got to be between 120.98 and 123 and a half. I mean, how many? You don't have time to add them all up in the book, Dennis, but there's going to be a lot of stock.
I didn't open my book, but I would think 125 is probably, this is a big psychological.
Yeah.
Whenever you have stocks making new all-time highs, you do run into book troubles so that's the only thing you can look at for levels, because there's institutions that put those things GTC, good till cancel, and they say, their valuation calls, and they say it gets up there, sell 100,000, 125, sell another 100,000, 130. And they just throw them out there and they forget about the orders. They bought the stock and that's where they're going to take their profits. It's passive management. It's not really the way, I would be doing my order execution, but they get done on some of those orders though. So, maybe that's the way. I don't work 100,000 share orders. So, we know Joe Sluzzi and Sal Arnick do a great job working the big orders over at Themis Trading. I'm working my own orders, which are not 100,000 shares.
Real quick question. How long does it take for lockouts to shake out? Here's the thing on these lockups. You don't really know if people are going to sell, right?
They don't have to.
Yeah, they don't have to. And, so if
they usually do.
Yeah.
I mean, if you're Travis Kalanick, then yeah, you sell 20% of your shares.
Right. So it depends. I mean, I think after the lockout day, if you see it declines into it and then it makes a low that day, then it holds that low, then you could take some of the selling pressures relief. But it just, the way I always look at it, wasn't with Twitter. This was a long time ago. The first lockup was coming, and then
yeah, and I don't think it did get the selling that.
Yeah,
I can't remember for sure.
Yeah, that was a long time ago.
What stock are they referring to?
I'm not sure what they're referring to, but the only thing about that, Dallas, is like you're predicating your action on what someone else may do or may not do. So you're kind of, waiting for someone else to dictate what happens. I don't like to do that. I like to be aggressive and make the move. If I'm sure to get into it, I'd like to see what happens that day, but it's tough. Let's, we got.
I mean, you might be referring to Uber.
Yeah.
Because Uber actually had the lockup, but now you've got an upgrade on Uber today, which is interesting. Argus upgrading it to a buy. Stock is barely trading up on it. There's been so much selling pressure in this. It's always interesting when you get a stock upgraded buy that's been kind of hated for a while here, and it's not trading up much. So I don't know. There's just a lot of overhead supply still happening with Uber. Maybe that's a lockup. Maybe there's other reasons here, but people aren't buying this upgrade this morning on Uber. It's up 18 cents only.
Boom. And let's see, 27.60. I see absolutely no upside in Uber until you clear that. not yesterday, but if you go back the last 5 days, 4 of the 5 highs, smack dab right at 27.50. So there's a target on the upside. Don't see a lot after that. If you can clear that, maybe 28.30. But so far, not getting a big reaction here in Uber.
Gonna get Nvidia tonight. I still have Nvidia in the long-term portfolio. The stock obviously has come back a long ways from the lows of the move. We got down like 128 bucks, I believe it was, or $124 back last year. But if you just use the 50%, we were 300, went down to 124. I don't know. We're somewhere in there right now, probably of that original move.
What stock are you talking about?
Nvidia.
Oh.
NVIDIA. I was looking at the sell-off from the end of 2018 when the stock went from being the love of the world from 292 all the way down to 124. So it got cut by 60%. Now you've had a pretty good rally back.
It's halfway.
I'm just thinking about the 50% of that.
209. I figured it yesterday. 208.61.
We're right there.
Yeah.
So I'm long it.
Report. If that was your target, you're buying the dip. I say you take it. Maybe do a little. And if you still think it's going to 210,
I'm up a lot on this stock.
Get out.
I bought that near the lows.
About it tomorrow. So you don't have.
I want it. I kind of want to hold it through.
I should have sold half.
Should I sell half?
I don't know.
Whenever I sell half, it's the wrong move because I'm a glass half empty type of guy. So if it goes up, I'll be like, why did I sell half? If it goes down, why did I sell it all? So you can't be right.
Yeah, you guys can hear Dennis complaining live in person.
Oh, that's why we started the show, so I could complain about my trades.
You can't win. You just can't win.
You know,
you lose all the time. When you only do half, it's an automatic loser if you're going to be pessimistic about it.
Actually, I talked to my cousin Jimmy, who was trading the stock, and he was trading into options. And I said, he's like, he had a target and he got out. And I said, well, do you ever get out of, just half a position? And he's a very good gambler and investor and everything. He goes, when I do that, I kind of feel like I'm betting against myself when I get out of half. So I don't know. I think just from a trading perspective, I mean, sometimes if you have a 2,000 share position, it's always that last 100 shares that you don't care about, or last 200 shares that you get the most money on. So I think it's a different philosophy. Just real quick, someone was talking about Amazon here, and I have an Amazon story.
Ooh,
this is why I'm bearish the stock. Okay. Has nothing to do with fundamentals. So last night, I was just getting ready to go to sleep. I don't know, like 10:30, 11 or something. I looked out, and there was an Amazon. I have a kind of a tricky driveway, and there was an Amazon truck stuck in the snow. All right. Like really, really bad. And there was another Amazon truck trying to pull it out. And they were out there for like 45 minutes. And I'm like, what the hell is Amazon? They're getting into this whole delivery thing. I was just thinking, getting away from the cloud. I don't know. To me, it was like, let someone else deliver it. I don't know. I think they're going in the wrong
they should
direction.
stay away from delivering themselves.
And the liability, Spencer, didn't you say that some Amazon drivers got in some accidents and killed people?
That's happened. Yeah.
Yeah. I don't know. Like what? Who needs one day delivery? I don't know. It's just
whenever
drones are going to be there.
Wait. Whenever Joel says it has nothing to do with fundamentals, brace yourself, because it could be about anything. It could be about literally anything.
There was a major headline on Amazon yesterday, which we didn't get a chance to talk about, and we can take the next minute. Nike looks like Nike going to be selling direct.
I don't know if that's that big a headline, honestly.
It sounds scary to me. We're just going to bypass Amazon.
Really? No. Amazon won't sell directly. I'm sorry. Nike won't sell directly to Amazon.
Yeah, that means they're going to bypass Amazon.
Yeah, but so what? I mean, Nike products are still going to end up on Amazon. I can sell Nike on Amazon if I want to.
You can, but the company's not. So I just don't know if that's a trend where some companies are going to start, just not. I don't know. To me, they hit the stock down $20 on it, so they hit it down on it.
Yeah, they did.
And they bought Nike on it.
Yep.
So I don't know. I don't know how that shakes out. I have no opinion on that yet, but I'm watching.
To me, that was a bit of a nothing burger, because you can bypass Amazon all you want, but Amazon will still get your products. somehow, some way.
You know what? The one thing about Amazon too, being that top component in the S&P, it has not participated in this. I mean,
Is
it's
Amazon
up
the top component of the S? No, it's not. Well, being a top component. It's
one
not
of
the top. One of the top. Yeah. Because
It's
Microsoft's the top.
right. Microsoft, Apple, and then Amazon, and then
The third.
combined Googles.
Yeah.
Yeah.
It's the PE on it. Because again, we've been talking about the trade. It's been like this value-oriented trade. So Microsoft trading with a lower multiple, well, a reasonable multiple. Apple trading with ridiculously low multiple. Those have been the stocks I've been buying. Amazon trading, 70 or 80 times. They're more hesitant, something like that.
I don't know. I just don't like that it hasn't participated in a rally. And I also like when you have these green bars like this. What's the low that I'm looking at here? I got rid of my data window. Let me pull it up real quick. That 1742.50 low. Is that what I'm looking at? Yeah. 1742.50. I mean, what's in there to 1700? I mean, it's not going to go whoosh and go straight down there. But I just don't, when you see those bars like that, yeah, you'll have some bars along the way. But I don't know. Just a little, I'm not shorting it. I'm not doing anything in it. But I just, I was looking out there and I was actually, I was getting my coat on and I was going outside to take a picture.
And then Jeff Bezos showed up himself.
Yes.
Okay.
Yes. No. And then, there's a rumor that
You should have went off into my hand. He didn't go off for the Canadian thing. Would have been to go and start digging.
Yeah. Oh, do you know how mad Lisa gets at me when I try and help push people's car out? She thinks that they're going to back up over me and get me killed. She won't let me do it.
You're invisible. They can't see you.
It's like, and I'm good at getting cars out of ditches and stuff. Anyways, 901.
Yeah, a couple of announcements. First off, we're still trying to figure out what the hot potato will be for tomorrow. But if you want to be on hot potato, email us premarket@benzinga.com and we can.
Who's competing against each other tomorrow?
I don't know.
We haven't quite figured that part out yet. We're still trying to work on the questions. But
All right.
if you want to be on hot potato tomorrow, end of the show, and there'll be trivia, email us premarket@benzinga.com.
Maybe we do. Let's bring out a couple of the fintech people over here.
Maybe. Second announcement.
Spencer didn't like that.
No. It's
okay.
We'll talk about it.
Right.
Second
Bad
announcement.
idea.
I'm dropping the link in the chat. The link to buy a ticket to the Benzinga FinTech Awards next Tuesday. We've been talking about it. We'll be there. The promo code in the link is already there. It's PMPVIP, or you can just go to fintechawards.com, enter the code manually. PMPVIP gets you a free.
It's still free?
That's what I'm told, man. Free ticket.
Are we going to have to move it to the garden?
I know. That's what's going to have to happen here.
Listeners come.
Maybe.
What are the numbers at now? You were at 500 a few days ago.
I don't
How
know.
many does that hold?
Again, don't know.
Big audience, 500 people.
Hey, Nicole and Patrick are in charge of it, so it's going to be
All right.
everything.
I'm glad we got some people coming. I like the free ticket idea because I get to talk to more people.
Yeah, and there was a question from Spice earlier. He asked what time. So the show, we're not doing the show in front of people.
We were trying to do the show live, and the problem is they're not letting us in early enough to get set up for the show.
So the conference doesn't really start till like 10:30-ish, 11. That's when Joel and Dennis's first session is at 11, I believe. So if you want,
I think we're gonna do it at 11:15.
If you're trying to plan your day, I would say get there 10:30, 11, anywhere in that window.
Yeah.
Is probably safe.
Yeah, that's probably, and then we're going to do our first session around 11:15, and then like the actual FinTech Awards, I believe, start at noon. But we're going to do like a 40-minute session right before it starts.
Right.
So for everybody, the early birds are going to get, and it's going to be, I've got my morning session, and it's going to be revolving around learning to trade the open. So lots of stuff I've talked about, but I'm going to give you some details on how I, obviously I leave at 9 o'clock the show, so I can focus on my open. Well, I'm going to give you a little, tidbits and secrets about how I go about that. And I've said it for a long time. I think I've never actually figured it out, but I would probably gather that I make, at least a third or maybe even half of my money on that open. So
and the other half,
it's a big chunk. It's a big chunk made on the open, and it's all, and that's what I'm going to talk about is how we go about it. Joel's going to participate because Joel's taught me a lot of these opening strategies as well over the years. Joel used to be a pretty good open trader too. Okay. Back in the day, Joel, you taught me a lot of this stuff.
All right, and you've taken it to another level.
I don't know about that, but
all right. So we'll talk about this on Tuesday. If you missed any part of our show, you can rewatch it on YouTube or catch the podcast. It's available on iTunes, SoundCloud, Stitcher, Spotify, basically wherever your podcasts are available. Please remember, all the information from our show is meant to be used as informational purposes only and not for investing or trading advice. Everyone have a great rest of your day. We'll be back with you on Friday.